Ever since getting my first credit card at the age of 18, I've been on a mission to get my credit score to 999. And recently I hit this milestone. So in order to celebrate this feat, I decided to make a couple of YouTube videos about that very thing. Understanding your credit score, and more importantly how to improve it, is critical to everyday life. It can save you lots of money on your mortgage, credit card, interest rates, loans, utility bills, mobile phones, and your car and home insurance. These are all things which everyone pays for in their life. So why not lighten the load and make them all a little bit cheaper? As if that wasn't enough of a reason, if you have a good score, not only can it save you lots of money, but also has the potential to make you loads as well. So if you're new to my channel, welcome. I'm Jim. I'm going to be talking about all things property investing, investing in general, and getting a better grip on your personal finances. But it's when it comes to the property investing part that having good credit is where you can make your money. If you have a better credit score, then banks are going to lend to you at more favourable rates, which means in turn it's cheaper for you to buy houses, meaning you can make more money in the long term. Not only this, but it gives you the option of being able to sign up with loads of different credit cards with some juicy sign up bonuses. So in order to cover this topic in the detail you deserve, I'm going to make two parts. Part 1 about everything you need to know about credit scores, and the second part which will break down all the ways to boost your credit score to the moon. So let's jump right into it. So what is a credit score? Well, according to the fountain of knowledge and truth, which is Wikipedia, a credit score is a numerical expression based on a level analysis of a person's credit file to represent the credit worthiness of the individual. In simple terms, that means it's a collection of information about you which a lender can see, and based upon that, the lender can decide how much credit they will give you. From a lender's point of view, they want to try and predict your future behaviour by using how you acted in the past, which makes sense because if you wanted to lend someone money, you want to know they're going to pay you back. So like so much in life, they are trying to manage the risk of you not paying them back by understanding how you've acted in the past. Your credit score and report not only impacts the amount of money which you can lend, but it also impacts the interest rate which you can get for certain products, such as mortgages or credit cards. For example, if you got a mortgage for £100,000 and interest rate of 3%, over the course of 25 years, you would pay £42,239 back in interest. But if you had the same mortgage at 2.5%, you would pay £34,602 back in interest. So you can save yourself a decent whack of money by having a lower interest rate. Now, there are three main credit reference agencies. These are the agencies who collect all the information and data about you and give it to the lenders. Each of these three have a different scoring system. Experian is 0 to 999, Equifax is 0 to 1000, and TransUnion is 0 to 710. Personally, I use Experian to look at my score. There's no real reason for this, it's just who I signed up with first. We've all heard of the term credit check. This is simply when a company looks at the information from your credit report to understand your financial behaviour. But there are in fact two different types of credit check, a soft and a hard check. A soft credit check is an initial look at certain information on your credit report. Generally, companies will perform soft searches to decide how successful your application would be without conducting a full examination of your history. These have no impact on your score and will not remain on your report. This might be done when you're comparing credit cards, loans, or mortgages online. I would recommend using the credit card eligibility calculator on moneysavingexpert.com as a starting point. Then a hard check is when a lender or company will conduct a complete search of your credit report. Each one of these is recorded on your report, so lenders will be able to see if you've applied for other types of credit. In fact, it's good practice to not have too many hard checks within the same period. So if you're going for a mortgage, then do not apply for lots of loans in the run-up to applying for this mortgage, as the potential is there for it to affect your suitability. As well as for loans and credit cards, you will also get a hard check when you're changing utility provider or mobile phone companies. One of the most important things to understand is what impacts your credit score. There are 6 main areas which will impact your credit score, and some of them are more influential than others. So if we start with the biggest piece of the pie, which is payments history. Payment history tends to be the most influential category which makes up your credit score. It makes up around 35% of the total score. The bits which make up this category include on-time payments, which is simply just a history of you paying your bills on time. Along with this, any late payments. If you're over 30 days late on a payment, it will be reported to your lender and could affect your credit score. Along with how many accounts you might be late on are also factors. And finally, any public records of filing for bankruptcy. The next piece of the pie is the amount owed. This is highly influential, making up around 30% of the score. In large, this category is made up of how much you owe on loans and how many your accounts have balances on. But the main part of this category is your credit utilization ratio. Credit utilization is made up by comparing the current balances with the credit limits on your revolving accounts, which are typically credit cards. To work this out, you will add up all the balances on your credit card accounts, then divide that number by the sum of all your credit card limits, and then multiply it by 100 in order to get a percentage. Generally, the lower the percentage, the better. Next up, we have credit history, which makes up around 15% of the total score. This is really easy and simple to understand. Your credit accounts will be looked at over a long period of time. They will look at the age of your accounts, your newest accounts, and the average age of the accounts. There is no real workaround for this, you just need to have been using credit well for a decent amount of time. Next on the list, we have new credit, which typically makes up around 10% of the total score. This can be activity on your report, which would involve lots of different types of credit. It would not hurt you if you were shopping around for the best deal, but it might impact your score if you're going after lots of different types of credit at one time, as it can be seen as you're desperate for money and more likely to make a poor financial decision. Making up the final 10%, we have the different mix of credit you have. This is about the types of credit you have. So you might have a mortgage, car loan, phone contract, along with other stuff you pay monthly for. All they're looking for here is that you can pay back all these different types of credit well and on time every single month so you can be trusted. The final part, which makes up your credit score, and it's actually the most important of them all, is to make sure you smash the subscribe button.
What if I was to tell you there was a list where all the bad boys and girls go when they have bad credit?
Although this is one of those things people seem to believe, it's actually fake news. At least in the UK anyway. Each lender will score you differently and secretly, which means from lender to lender they can have different criteria about what they want from your credit report. So if you get rejected by one lender, it does not mean you'll be rejected by the other. But on the flip side to this, if you have poor credit, it might feel like you're on the naughty list. But this is just due to the fact you have bad credit, which is thankfully something you can improve on. Even with poor credit, you can still get loans and other stuff, but might just have to pay a higher interest rate. Like we said earlier, your credit score is trying to predict future behaviour. So having a bad credit history will do you no favours. But along with this, having no credit score will not help you either. So if you're young, chances are you will have no credit, which will act against you. So it's in your best interest to get it sorted. But you're watching this video, so you're doing the right thing. But if you want a more detailed breakdown about how to improve your credit score while you're young, check out the video I made on that subject at the end of this one. Something else which is important to understand is lots of these companies are after making money from you. This can sometimes play a role in whether you get approved for credit or not. They're checking your score to see if it matches up with what they want from a customer. For example, you might get rejected from a credit card if you have a track record of always paying it off in full every month, which you should always do. But due to the fact they will not make any money from you in interest, you will get rejected. Not only this, but some of the products which banks in particular might offer might be to get you through the door so they can remarket to you down the line. But if you do not fit the bill, you might get rejected. For example, banks tend to make decent money from mortgage products, but a good way to get people in might be to offer a current account with a high interest rate. But the only reason the bank is doing this is so they can offer you a mortgage down the line. So they might score you as if you're a mortgage customer. So the upshot is, it is not 100% clear what they want from you. So even if you have a Gucci credit score, you might still get rejected. Obviously, lenders have to know certain information about you. So let's take a look about what they do and do not know about you. Lots of the information the lenders will know will come from the application form which you will fill in when you apply for the loan. This will generally include information such as postcode, how much you earn, family size, reason for the loan, and if you're a homeowner. They will also have access to any previous dealings they have had with you. This can sometimes work to your advantage. If you have a poor credit score but have been with a bank for a long time, they might be more likely to lend you money. But then on the flip side to this, if a lender's had a negative experience with you, then this might count against you. All of the lenders will use at least one of the 3 UK credit reference agencies to see what information they have about you. All of this information builds up in your credit report, which will have information about your score. The data from this report comes from a few different locations. First is the electoral roll information. This is publicly available information and contains details of addresses and who lives at them. As a spoiler, making sure you're on the electoral register is one of the ways to boost your credit score, which is what part 2 is all about, so make sure you check that out at the end of this video. These agencies will also pull information from any court records, which will include county court judgments, individual voluntary arrangements, bankruptcies, and any other court debit orders, which might show a history of problems with debt. The next set of data will include records from other lenders who have searched your file and when you've applied for different credit, along with addresses you are linked to, which is why it's important to make sure you're putting consistent information across platforms and lenders. And finally, other people who you have a financial connection with. So this will include joint accounts and products with friends, families, or partners. It's worth remembering that big gas and electricity firms will do hard credit checks, so these will also be on your files. Another set of data which will be linked to your report comes from your account data, which comes from your banks, building society, utility company, credit or store cards, loans, mortgages, bank accounts, energy providers, and mobile phone contracts. And that's any information within the last 6 years. Finally, any payday loan data is now reported as well, and it's my personal opinion to try and never use these loans, as you can end up in a pretty sticky situation if it all goes sideways. The last set of information the lenders will have access to will be any fraud information. This will include if you've committed fraud or someone has stolen your identity. Now we've covered what information lenders can see on your file, let's talk about what they cannot see. They do not know anything about your race, religion, or ethnicity. These types of personal details are not held. How much you earn is not on the report either, but like we mentioned earlier, it's probably a question which you'll be asked on the application form. But this information is not kept on the report. Finally, none of your medical or criminal records, apart from fraud, will be kept on your credit report either. Sadly, when it comes to your credit score, the numbers do matter. The score is the best metric for you to follow, but interestingly, the lenders do not actually see your score. They will just look at your report and come up with their own judgment about how much they're willing to lend you and at what interest rate. It is perfectly normal when you do apply for some new credit that your score will take a dip. Do not worry about this in the short term, as it should iron itself out in a few months. Although the credit score system is far from perfect, it's the current setup we have. So you may as well box clever and use it so it's working hard for you. A good way to do this is to check out the video I made about how to boost your credit score to the moon. Or if you want a more detailed breakdown about how to improve your credit score while you're young, check out these videos now. Do not forget to subscribe to the channel, and if you want to connect with me directly, reach out on Instagram at Jim_Holland182, and I'll see you guys in the next one. Cheers.